The government's reliance on bank borrowing is increasing, already surpassing its annual target with 3 months still left in the fiscal year. In the past 9 months, the government has borrowed approximately 1.09 trillion taka from the banking system. In less than 1.5 months after taking office, the BNP government alone borrowed 410 billion taka. This surge in borrowing is being driven by rising government expenditure and lower than expected revenue collection, which economists view as a warning sign for the economy. There are concerns that this could crowd out the private sector, reducing opportunities for new investment and employment. Economic activity is currently sluggish, with limited momentum in trade and commerce. Export earnings growth has also slowed in recent months, negatively impacting government revenue. From July to February, revenue collection fell short of the target by about 715 billion taka. At the same time, increased operational expenses have further pushed the government to rely more heavily on bank loans. In the first 9 months, July to March, of the 2025-26 fiscal year, total government borrowing reached 1.089 trillion taka, around 50 billion taka above the annual target of 1.04 trillion taka. A significant portion of this, about 780 billion taka, came from private commercial banks. Additionally, around 310 billion taka was borrowed from the central bank, with another 100 billion taka raised through special auctions. Bankers and economists are expressing concern over this growing dependence on bank loans. Economist Dr. Mustafa K. Mujeri noted that failure to meet revenue targets has forced the government to rely more on domestic borrowing. Syed Mahbubur Rahman, managing director of Mutual Trust Bank, stated that the declining tax-to-GDP ratio and rising operational costs are driving this heavy borrowing, which signals broader economic risks. Meanwhile, private sector credit growth has dropped to just 6%, historically one of the lowest levels. Experts warn that continued government borrowing from banks could further squeeze credit availability for the private sector. Reduced lending capacity of banks may hinder private investment and slow economic recovery. Even if the economy rebounds in the future, rising interest and deposit rates could create additional pressure in the market. Experts are therefore urging the government to strengthen revenue collection and cut unnecessary spending in order to reduce the budget deficit and lessen dependence on bank borrowings.